Hey everybody, what's going on? It's James here with Crypto Common Sense. Wanted to shoot a market update video for you. We just had our Monday close about 13 minutes ago. And if you are a bear, it's probably been a nice thing to witness this close. But don't count your chickens before they hatch. Let's talk about all the different possibilities, or at least some of the possibilities, the more likely ones. And we'll talk about what I think is going on with the market and what type of trades I'm looking for. Before I jump into this video though, please do me a huge favor, go ahead and hit the thumbs up button and don't forget to subscribe to the channel if you haven't already. Okay, so here's the deal, guys. Obviously I had a bad trading day Friday, but I got back on the horse, traded all weekend, had 4 or 5 trades last night. Been scalping Bitcoin, and it's funny because one thing I'm going to tell you guys about is emotion it's the crux of every trader, right? It's what's going to determine how good or how bad you are. And I let my emotions get the best of me last night because I didn't take an obvious trade. Well, I took the trade, but I closed it for about 1% because I got scared because of that big loss on Friday. And that's the type of stuff that you won't hear people talk about a lot, is how, you know, fear really kind of wreck you as a trader. So I'm going to show you that trade. I'm going to show you what I didn't do and what I should have done. And that way you can learn from it. And don't worry, I am going to talk about where I think Bitcoin's going. But essentially last night, I saw a trade come in at around 9,900 bucks. But that was the first spot that I didn't take it. Okay, 61.8 fib, right? Talked about this lots and lots of videos, guys. If you don't learn much from these videos, at least learn how to use these golden ratios. Right there was our short zone, the golden short zone. Where I should have been looking to take a short position. It came up and touched it perfectly, look at this, and then dumped. So I missed that one because I was like hesitating. And then later, I realized that I had a second chance to get in at $9,700 right on this candle right here. And so I went ahead and I entered a position. I didn't get the perfect top, but I entered a position at 96.55. So I went short at 96.55. Right in this area. And I set my stop loss just above this candle here, okay? Sorry, not that candle. Just above these candles here, right? These right at 97.40. So it was a super tight stop loss, right? Less than 1%. And I felt like this thing was going to break down to 8,700 and fill in the gap. So if you do that, that's a 10-to-1 risk-reward ratio. What that means is if I was right, I would make $10 compared to if I was wrong, I would lose $1, right? So, you know, just as an example, a nice round number, if you're doing a $100,000 trade, you know, if you're right, you make 10 grand. If you're wrong, you lose a grand, basically. But because of my fear, once I got into that trade, first off, I took a smaller position than what I normally take. And then on top of that, I closed it way the hell up here for like, it was 95.47. For like 1%, right? I got back in right after that. Actually went short again at, I don't remember where I went short the second time. Let me look real quick. I don't want to tell you the wrong number. Oh, it's not showing up on my thing. Anyway, it doesn't matter. I went short again. And again, I closed that one for 1% as well. So, really shot myself in the foot on that because of fear, right? Because of that big loss. I was like, oh, I don't want to, you know, I want to go ahead and book some of these profits. I want to make back some of the money that I lost. They call that revenge trading, okay? And revenge trading will get you in a lot of trouble. Even when usually when you hear people talk about revenge trading, they're talking about, trying to get even and losing money. But you can actually revenge trade, try to get even too quickly, and then close trades early instead of letting your profits run, which is exactly what I did, right? Don't get me wrong. Obviously, I'm very happy that I won, that I made some money on those trades. But I did, I basically minimized my wins because that fear was eating at me, and I was like, oh God, I just can't take another loss emotionally, right? Financially, my trade fund is fine. I'm still, well in the green, but yeah, emotions will definitely mess you up, okay? So let's look at the bigger picture. Let's look at Bitcoin and let's see what's next. So ironically, even though I'm a bear, guys, I was watching this pattern right here. This is actually, to me, this looked like a bull pennant. And I was watching it with a lot of interest because if you measure this thing, that flagpole was about $3 grand. So if you pulled that over there, the breakout target was around $12,500, right? So I was really watching that. But we've fallen out of the bottom of it, so I think that's very bearish. Also, like I've been posting all day on Twitter and all week. This is our bearish retest of this line in the sand. It's failed so far, and it's turned back down, and it's starting to head south. So we'll see how this week plays out. But so far, it's looking like this is going to be a repeat of February of 2018, where people didn't believe it was a bull market, where we had this huge rally. People started pouring money in, and then they got their hopes and dreams crushed when they found out, oh God, it is a bear market after all. So that's what this looks like to me. This looks like the last breath of the dying bulls. It looks like this was whales pumping this market, using that China news to pump the market. And again, we had bullish divergence. There was a reason for a bounce. I called the bounce on October 23rd. It didn't bounce until the 24th. That's when the China news came out. I think they just used that narrative to push it up a lot higher than what it would have went otherwise. But I think it was just them unloading their bags. I think it's headed lower. The ironic thing is I kept saying for about 3 or 4 weeks that we needed to retest 9,500. We needed to retest 9,500. And I sounded like a broken record. And then about the time that I decided, I guess we're not ever going to retest it, look at where this candle closed. This weekly candle last week closed at $9,548. What did we do? We came up and retested 9,500, which was exactly what I expected to happen. But because my timing was off, I lost a ton of money. Okay, but we are back in bear territory on the weekly. We were not able to close above the 21 weekly moving average. You can see we snuck above it, but closed underneath it last week. And so far this week, we've tagged it and we're soundly rejected. And now we seem to be heading south. On the 3-day chart, we're back inside, we never left. We're inside the bear market RSI, this red box. This is the RSI that you see during a bear market. You can see back here in 2014 and 2015, RSI played in this area with a false breakout. Over here, we played in this area all through 2018. We had this, what I think is a false breakout, and now we're back in this area. So I think, we are indeed still in a bear market. If we look at our triangle, I believe in yesterday's video I said the triangle was no longer valid. I was wrong. Basically what I was doing was I was drawing it to the wicks, which is, by the way, valid. You can do that. But you can also draw it from the closes. So if you draw it from the wick, right, I think this could go either way. If you draw it from the wick, this looks like a bullish retest, right? Up above it, back down on top of it. Now it could bounce from here, and this could still be a bullish scenario where it goes absolutely bonkers. But I don't think so, based on the fact that our RSIs are still in the bear zone. Also the fact that we just fell out of this flag, right? It's likely that it'll come up and retest the bottom of it and then continue down. That's kind of what I'm wondering. And overall, I think that if you draw this on a daily chart, just like this, from close to close to close, right? We had a false break above it, false break above it, false break above it. This looks like a false break above it, and it looks like we're back inside of our descending triangle. Also, on the daily chart, if you see this, we had RSI making a higher high while our price was making a lower high. That's called hidden bearish divergence. Now, if you don't know what that is, be very careful over trading that. It only applies when a market is in a downtrend. So if this market was moving up and you saw that, it wouldn't matter. But when your price is moving down, and again, we've been in a downtrend for about 4 months and 2 days now, 4 months and 2 days of a downtrend. If RSI makes a higher high and price makes a lower high, that is called hidden bearish divergence. So guess what? Our triangle is back in play. And again, just to remind everybody what that looks like. That triangle, now if we're going to draw it from the closes, we got to draw it from the close to close. We can't draw it all the way up to the wick. So 54.82 is the price on that triangle, or the range on that triangle. That would put us down right around $2,000, which would actually, let me draw a horizontal line for you guys. Would make sense. That was actually support back here. You can see this, boom, tested it, boom, tested it, boom, tested it, and up we went. So it could be that we're going to come down and retest that $2,000 area. That being said, do I think it's time to open a short and try to ride it to $2,000? No, guys, that's not how that works, right? Holding short positions long term is expensive with fees and everything like that. My position trades, meaning that, the coins I sold, yes, I'm waiting to buy back, hopefully down at those levels. But I can buy back at any time before that. You know, it's like I said in yesterday's video about the 50 Fibonacci levels. If we do get back down to 8,500, if that happens to be the case, if we go back down to this neckline around 8,500 bucks, and if we put in bullish structure, meaning we put in some type of double bottom, or we find some kind of support there and we start moving back up, then yes, I may end up buying back my position at $8,500 or even $9,000, right? But not $9,000 on the way down. What I would want to see is I'd want to see it come down, right, to that 8,500, and then do something like this, and then head back up. And if it did that and then it broke its neckline, I would probably be looking to go long. Probably around 87, 8,800 is where that would happen at. Alternatively, you know, we do have, this was a high, this was our low, here's a higher high. So again, we could just come down, put in a higher low, and then if we start back up again, I would probably go long, right? If it looks like we're going back up. But I would be using a tight stop loss, because what we could get is we could get a bounce here that looks like it's going to go long. It just tags to the top of the triangle and then, you know, craps out and heads on down. So I'm looking to the future. I'm looking at all these different possibilities of what I think might come to pass. Okay. Also, guys, I want to mention, you know, even though I'm a bear, it doesn't mean I never go long. Last night I took, it was either 5 trades or 4. I think it was 4. I took 2 short positions that both worked out. I took 1 short position that would have worked out, but I got scared and closed it for break even. And I actually took, no, it was 5 trades. I took 2 longs as well, right? One of the longs got stopped out. One of the longs actually made money. So I'm still going long and short both on a day trade basis, right? There's still trades to take. Just because I'm a bear, it doesn't mean, you know, I won't take a trade. I actually tried to take a trade right here. After this thing bounced like this, I tried to get in at 92.40, and unfortunately, you can see this red candle came down to 92.44, so it didn't fill my bid, right? But if it had, I would have went long right here on the open of this candle, basically. Not on that candle, it would have been over on this candle here. But if it had come down and retested that, it would have filled my order. And right now I'd be up about 0.5% or so, right? So yeah, this is a gap, right? This big drop, this sudden drop, just a little 5-minute gap, but it's still a gap. So totally possible that we could go up there, right back up to 9,400, right? And then go lower. So yeah, I wanted to go long. Didn't get my fill. That's trading, okay? But overall, I'm bearish. I'm very, very bearish. All these RSIs make me a bear. The descending triangle makes me a bear, and the pump itself actually made me more bearish than ever, because that 44% pump, whatever it was, that's not normal market behavior. That looked very, very suspicious, and we all know that a lot of whales happen to be located in China, right? So you just have to wonder if maybe some of those people didn't have a little bit of a heads up that China news was coming, and that maybe this was all very, very planned insider trading type of deal, right? If you were a whale and you went long here, you know, there was a potential to make tens of millions of dollars, right? 44%, come on, right? Imagine you put in a $10 million trade, 44%, that's $4.4 million, right? So super bearish, with the caveat that I'm open to the possibility that it could find support and move up. But until it breaks out of that RSI, and until it breaks out of this triangle and closes above it, right? Closes above this, I'm probably still going to lean bearish. That's just how I'm looking at it. I still fully expect that we're going to fill in this gap way down here at, you know, around 41 to 4,200. And I still think it's possible that we go as low as 2,000. I want to be very clear, though, guys. It's not that I'm going to, again, like I mentioned earlier, it's not that I will sit and just wait for this level. It may not ever happen, okay? So you've got to be prepared. You got to watch this market. Don't sleep on this market. This market can put in bullish structure and head north in the blink of an eye, right? And that's not FOMO. That's just reality. It's like over here when it broke out back in April. You basically had like 2 days, right? So if your neckline was right here, you broke above it right here, right? Not a good place to get in. It didn't close above it. Broke above it right here and closed, and that was it, right? If you didn't get in right there, you missed it. So you had basically 1 day to get in, right? And if you look at this on like a 4-hour chart, and we went back in time, okay, so it broke above it, closed above it. Right here would have been the entry, right around $4,112. Moved sideways a little bit, and then about 16 to 20 hours later is when it rocketed up. And if you didn't get in this, these 4 or 5 bars here, you've never had a chance to get back in at that level. Now you might, right? Again, if we come back down to that level, it'd be great. But you don't want to miss that, because it could be that it does come down to 8,500 and it does find support, move sideways for 12, 18 hours, and then it just starts its next leg up, And if that's the case, if it does turn out to be a true bull market, we may never see price go back down to that $3,000 or $4,000 level again, right? We may never see price come down to the $8,000 level again. What most people are expecting to happen is they expect this thing to go up to like 60, 70, 80 grand, whatever, and then have another 80% pullback. I don't know that it will, right? If institutional money does come into the market at that point, we may never see another 80% pullback. Or we might, but if it does go up to say 80 grand and pulls back 80%, that's still, I don't know the math right off the top of my head. 16 grand? Pull back to 16 grand. So overall, though, that's what I'm looking for, guys. Still bearish, short term. I'm looking to scalp. I missed the entry. Unfortunately, I missed the entry on that $9,900 level. I missed the entry at the. I didn't miss it. I got in around 96.55, but I closed it. So as far as trying to ride this thing down to fill in the gap at 8,700, the risk reward ratio is not all that great now, right? So I'll probably just keep scalping it. I'll just probably scalp all the way down, and that's probably how I'll play it. This looks like a BART. This looks very much like it's going to BART on us, okay? So just be mindful of that. And again, watch the 61.8 fib, guys. Between that 61.8 fib and divergences, a person could probably make a full-time living just trading those two things. All right? As always, please remember I'm literally some guy sitting in a spare bedroom, so nothing in this video is financial advice, nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. Don't forget to check the description for links where you can follow me on TradingView, Twitter, and also join my free Facebook group. And don't forget to give this video a thumbs up and subscribe to the channel if you haven't already. This is James with Crypto Common Sense. Trade safe.